Now we do have potential support coming in around 17.5. That's going to be a big level. That's the June low. But my guess is that could be where we're headed at this point. But again, I was optimistic the last few days, looking at Bitcoin holding up and holding up for multiple days. And today's kind of like the wind coming. Yeah, I actually, so end of year, I think worst case, we're going to 3,400. So, I mean, I don't mean to be the bearer of potential negative news here, but if we actually just take a look at this chart, this is the S&P chart, the S&P 500, you can see that massive rally that you were just talking about, that bear market rally. And then look at how quickly we've given it up in less time. Now we have hit some support right in here. You can see these little pivot points. So this does mean that there is a chance we could get a short-term bounce here. But I'm still in the camp that I think, thinking about what the Fed is doing, how they're now unloading their balance sheet, they're raising interest rates, and they're likely going to raise at least by another 50 basis points in September. I think that you could, by year end or early 2023, retest the March or February 2020 highs right here before that COVID dip. So that's my target. And again, end of year, early 2023. Yeah, so near term, it's more that these headlines will trigger people to say, okay, governments and maybe central banks are willing to still step up and stimulate if things get too rocky out there. I think that this is just the very beginning, and if in the article it talks about very minimal kind of intervention, but the point is that if they're already willing to kind of come in a little bit, what happens when things get worse, and how many other central banks, how many other governments are willing to come to the rescue as you see the population start to kind of create this uproar. And again, we've seen this time and time again, how the more rough the period in the economy is, the politicians which have to be reelected, well, guess what? They just look at a 4-year span, at least here in the United States. So they're like, well, we got to print because I need to get reelected. And you'll see more and more of that. Now, I still think there's a rough road to go, but there will be a pivot point where you even see the US, the UK, Europe, Japan, they're all going to start to do this. So I do think, just like we saw a jobs number that came in a little bit better than expected, kind of in that Goldilocks range, I do think you're going to see a continued kind of relaxation of the CPI numbers. And I think that's going to give the Fed that ability to say, hey, listen, we're still going to keep the pedal to the metal. We're still going to do 50 basis points in September. But I think you're going to see the economy weaken more and more towards the end of the year. And they're going to back off to the point where my guess is only another 25 basis points into year end. Now, the problem here is, number one, that's going to be viewed as very bullish for risk assets in the near term, until we slip into a recession, and the market and all the investors out there, they look around and they say, okay, Fed, we're in a recession. Come get us out of this now. And the Fed's going to say, well, it's not a depression yet, so we're not going to, with inflation still at 4, 5, 6%, we are not going to print. And that's going to freak the markets out. The market is so addicted to knowing that the Fed is like the parents, right? And they have this little kid, and they, the kid falls and the parents kind of just catch them. But at some point, the Fed is going to be handcuffed. And I think that point is coming late this year, early next year. I mean, today is definitely, on a technical basis, not a great situation. Now, I will give Bitcoin credit, right? We've seen the dollar continue to ratchet up day after day after day, and Bitcoin was just going sideways. So you could actually say, okay, Bitcoin was holding up. But I look at today's up move in the dollar as potentially the straw that broke the camel's back with Bitcoin. It's just so much pressure from a rising dollar and risk assets. I mean, we've seen the stock market rolling over, and Bitcoin for the last 10 days or so has just gone sideways. So it was almost inevitable, if the dollar was going to keep going up, that at some point we were going to break down here. And you could see a nasty red candle here. Now we do have potential support coming in around 17.5. That's going to be a big level. That's the June low. But my guess is that could be where we're headed at this point. But again, I was optimistic the last few days, looking at Bitcoin holding up and holding up for multiple days. And today's kind of like the wind coming out of the sails, if you will. Yeah, so I do think that it's going to be a scenario where you're going to have to see major economic hardships for them to kind of throw in the towel, if you will. So you have the whole rest of the world, well, not the whole rest of the world, but the U.S. specifically, that's sending natural gas over there as much as they can, driving it over there. Because again, the U.S. looks at it like, listen, we can't let them give in, or otherwise Putin essentially wins the energy war, which is going on right now. So I do think it's going to have to be economic, and I do think that this is going to, it's one of those weird things where you have this short-term issue, but I do believe Putin's making a long-term miscalculation here, because this pressure that they're putting on the rest of the world, it is going to drive alternate energy faster. More, I mean, you already saw what passed in the US, and it's going to put a situation where in 10 years, the rest of the world is going to say, okay, we've got so much renewables, or we started drilling again, or we started doing all this, that we don't need you anymore as much. And I think that's the long-term goal that I think he's miscalculating here. And I would just like to interject too, and I think that what's important here is price action, right? And basically what you saw on Friday, so Friday afternoon, we heard about Nord Stream 1 being shut down and how it was going to be very detrimental. Right, zero, right, 100% zero. So one of the things I looked at there is I was like, okay, well, natural gas should be surging, right? And natural gas did not. In fact, it was down that day. And if you look at today's chart, you are seeing a big collapse in natural gas. Natural gas is down almost 9% on the day. And as a technician, I say, okay, well, the market's basically calling the bluff here and saying that right now, they're going to figure out alternatives, and Russia's not going to have that ability to kind of be able to get Europe to throw in the towel. So very interesting here to look at price action. Yeah, so I have it penciled in only a 50 basis point in September. And I think, again, the last jobs report gave the Fed that little door opening. And I think the Fed is very aware here, right? So the Fed is aware that they can't stimulate if they push us into a recession and it gets bad. So even though they have to talk a tough game because they have to keep expectations high so the equity markets don't surge, and which creates more inflation, they also can't overdo it. And I think they're looking to kind of take a back step. Now, remember, they've just started this month unloading their balance sheet. So in a weird way, that's tightening as well. So they have to be really careful here not to do 75 basis points, unload $1 trillion from their balance. I mean, there's a lot here that could go wrong. And so that's where I am at, where I think that the Fed will probably start to do that 50 and then maybe 25 the rest of the year, and kind of let's see how it plays out. I think the markets have priced in more, so I think there's a technical risk asset bounce that when the markets start to see 50 basis points is only coming, and maybe only 25 or 50 into year end, then the markets will say, okay, let's breathe a sigh of relief. That will be the relief until we slip into recession, when they're like, oh my goodness, now how do we get out of this?